So yeah, so today what we are going to do is we will look at fintech and banking, like how fintech has impacted banking, right? So let's just recap what we learned last time, because this is coming from that. So last lecture, do you remember the types of innovations that we discussed? Can you just recall? You don't have to give the exact names, but the type of innovation. We also discussed about a particular type of innovation. Can you recall? No?
Structural innovation, infrastructure.
Yeah, architectural, and
Architectural.
then we had disruptive innovation, radical innovation. So, so these are the four types of innovation that we discussed. I will, for your assessment, this will also be there. And then we went on to disruptive innovation, right? And what we discovered from the basic model, like we didn't go into very complex models, but we took the very basic model. And what we saw was that the disruption happens from the the boundaries, right? From this lower end, from the small end, it takes place from the smaller end, right? And then the new entrant or the fintech will develop their capabilities and be able to serve the main customers of the incumbents. And that is where the disruption happens. When the new entrant starts capturing the existing customers of the banks through their low cost models and products, that is when the disruption happens, right? It's not just someone who disturbs the market, right? So now, based on that, we will go to today's lecture, right? So this one, today we are going to look at how fintechs have affected the banks, right? Now, have you all heard of these terms, open banking? Have you heard of the term open banking? Okay. Digital banks? No. Okay. Then challenger banks? No. Okay. So these are all new. These are all changes that is taken place that is taking place in banking, and the terms that are being used for these type of banks. So we will first start by looking at open banking, right? So open banking would be the sort of the concept where we still see a distinction between the incumbent bank and the fintech, right? So we can still see the groups separately, right? So open banking is a banking practice. Of this I got from Investopedia. So this is, I'm using very basic descriptions for y'all, simply because these are new terms, right? So you have to learn it from the very basic point. And if you can't understand, please, or if you, not that you can't understand, if you have any questions, any sort of, this is not making sense, how is this different to what we are doing already? If you have any questions, just ask, right? Because these things are now coming. It's already coming to Sri Lanka as well, and some of your banks have already started on these things. So it's important that you understand what these are, right? And some of you might be involved in it as well. Okay, so open banking is a banking practice that provides third-party financial service providers, right? So third-party financial service providers are people who are not the bank, right? It is not the customer. It is a new party coming in. All of you who know what a third party is, I think. Providers open access to consumer banking, transaction, and other financial data, right? Now that's the important thing. It's to financial data, right? From banks and other non-bank financial institutions. So it doesn't have to be banks alone. It can be non-bank financial company, finance companies, leasing companies, whichever that has financial information. Now this is giving that access through the use of APIs, right? APIs are, the long word is application programming interface, but it is basically a link. It is basically a link between two systems, right? So the third party can access information that the bank is giving through these APIs, right? These are in the systems. Now, open banking is also called open bank data, right? So this is really a data related question and moving of data up and down, right? Now, open banking will allow networking of accounts and data across institutions, right? For the use of consumers, financial institutions, and third-party providers. Because once you have an API, anyone can access it, right? If you have the required permissions, if you do the necessary software development, then anyone can use this data, right? Then open banking is a major source of innovation. Now, how does this become a major source of innovation? Can anyone just tell me, how do you think having all this data for third parties becomes an... So I'll just go back to the slide and we'll just go from there. So as I said, I'm not sure whether you heard, so open banking is where third parties get access to the bank or non-bank financial data, right? Through APIs. And so this is sorry, did someone say something? Did someone say something? No? No? Okay. So do this so that I see you as well. Okay, this is going to be distracting for you, but let's do it this way. Can you see the screen? Is this level enough? Of course. When we look at open banking, what we are looking really is not the concept, it's not a physically open bank, but a digitally open bank, right? So it gets access, we are not talking about access to customers, but access to third-party service providers, right? So companies that can extend the financial service to by using already available data in the bank. Now, banks have a lot of data, right? All our financial data is there. Our account data is there. So the frequency of the data is very high. And as more and more people go to using cashless methods of transaction, right? Then all our transactions get recorded in the bank. So there's a lot of data getting stored there. But what people figure out in sort of, especially after the financial crisis in 2008, when everyone was trying to improve banking services, was that even though all this data was available, and though digital technologies had really improved, that the data in the banks weren't sufficiently getting used to give customers better services and additional services, right? And also, they found that the nature of the way that the data is there, it's not accessible, right? So through a series of, there were many versions of trying to access data. And this discussion started in the UK and EU around 2012 or so. And this is really, open banking really started in UK and Europe, right? And because it is not that APIs were new. APIs are quite old in computing, right? But it's not that the banks were unaware of APIs, and it was not that the banks weren't using APIs, but this concept of handing over data to third parties to provide more services was a concept that was not common in banking, because banking is traditionally a closed industry, right? So we have secrecy, we have confidentiality. So with all that, banks don't share their information, right? And we trust banks to not to do that, right? But the world has changed, right? So there is concepts like open source. I think we discussed this last time as well. So open source is again where you open the source code of your software so that others can develop it, right? And I think that was given as the example for architectural innovation, sorry, for disruptive innovation. And so in the same way, this idea of openness really developed in the world, with the internet becoming more common, and mobile phones and PCs, laptops, and people had more access to digital technology. So therefore, this concept of openness became more and more popular, right? And so this openness is, that concept of openness is what came into banking as well. It's like, if you have the data and if you can't do anything about it, then let someone who can. You can't do anything about it because you're already busy with whatever work that you're doing. The banks are already busy with, providing financial services, supervision, monitoring, regulating, all of that. So then let a third party do that for you, right? So that is basically the concept of open banking. And but though the concept is there, you can't just open, right? You can't just give access to data. Because this is financial data and there is a lot of secrecy involved, it's confidential information. So then you need to develop, and also this is very valuable data, right? This is, it is not just data. Financial data is extremely valuable. Access to payment, giving access for payment intermediation is a very valuable service, right? There's a lot of money involved. So there is no reason to just open things up, right? And banks actually were very reluctant to allow open banking at the beginning, because they felt, we are spending all this money maintaining the quality of the information, the customer information, with the AML CFT procedures, anti-fraud measures, all of that. And then suddenly these third parties get to come in and take our data and make money out of it, right? And also disconnect the bank, because once the third party comes in, the customer is no longer connecting with the bank, but connecting with the third party, right? So now this became a big problem. And for years in Europe, there were negotiations, discussions, fights, and PSD2, which first had its draft in 2012, actually finally got implemented in 2019. So it took all that time because there was a lot of discussions going on, mainly because the fintechs wanted a lot and the banks didn't want to give anything. And then that's why the regulation came in PSD2 regulation. Have you heard, has anyone heard of PSD2? Has anyone heard of PSD2? Payment Service Directive? So PSD2 is a really important regulation. It's a EU regulation, but like the GDPR. Have you heard of the GDPR, the General Data Protection?
Yes.
No? Yes, okay. So like the GDPR, PSD2 has become an international standard, right? So though it is only for the EU, the basis of the PSD2 has been adopted globally now in many countries, because one good thing about the European legislation is there are already a lot of countries involved in negotiating for that, for those regulations, right? So, and Europe is very forward thinking, and it's also kind of liberal, and it wants to be innovative. So, and it has a lot of sort of safeguards for the individual as well, right? So, because of that, the huge consultative processes that go into coming up with European legislation, even for the GDPR, right? It's so stringent and it's so comprehensive that the ultimate outcome can be adopted by other countries, because they are fairly sort of well debated and drafted regulations, right? So they become the basis. They have some interesting principles involved. So that's why after Europe does a lot of the hard work, the rest of the world can benefit from them, right? Um, then so finally in PSD2, what happened was the banks were resisting, and then finally the European regulators were like, no, you need to open up. The banks need to allow more competition in the market, right? And they brought in PSD2 and created new types of stakeholders or actors in the payment and financial services relating to this digital connectivity, right? And when they mandated it, and then they mandated it and told the banks, okay, by this date, you all have to have open APIs. You all have to open some APIs, right? And then the question was, okay, you can open APIs, but you can give very useless information, right? So what is an open API? So there was a lot of discussion, like just, is it just opening any API, but what does opening an API mean, right? So this is a case where where you can go into open banking through market. The market creates open banking. Now in Sri Lanka, we have cases where so some banks have already adopted a level of open banking, right? Without the central bank really pushing it. But in case of Europe, they had to intervene and say, okay, everyone has to open, because there is the concept of networking, right? We discussed this earlier. In financial services, the network matters. Now, if you're a bank, being the only bank, it's difficult to do banking. You at least need another bank, to take a loan from for money creation. All of that, you need a network, right? And there are gains by being in a network. Now, open banking is also the same. It doesn't matter if it's only one bank, then having a third party to provide services doesn't make sense. It makes sense for the third party to exist if there are many banks, and there's a lot of complexity on the other side, right? Because third parties are minimizing the complexity, right? Um, so PSD2 came into full effect in 2019, and many other countries have followed suit. And they've been, they don't take it as a whole, but they make context-specific adaptations. But more or less, it has started, right? Are there any questions so far? Any questions so far? Right. So this is a sort of basic diagram I got it from a Deloitte's report. Let's simplified. So this is the traditional banking, right? With the customer and the bank, right? So this is just the interaction. But when we go into open banking, now you have the bank here, you have the third parties, you have the customers, and then you have other services as well, like price comparison. And you can price compare between banks. You can have apps that directly compare interest rates, and this is through the app itself, or mortgage rates or anything like that. You can directly do the price comparison there itself, right? And third parties can connect in whichever way, right? So basically, if we look at this, right, now without open banking, now banks already have banking apps. Almost all our banks have banking apps, right? So this is what without open banking means, right? So each bank has its own app, and the customer has to go through different banks app to connect to that bank, right? Now with open banking, this third party provider, right, this fintech app can use the APIs of both these banks and aggregate it, and this is what the customer gets, the aggregated view, right? That is one way that the APIs can be used, right, to aggregate multiple accounts of customers. This is under the presumption that customers have multiple accounts, right? So let's just look at a video, and so that you can understand this better. Can you see the screen?
In 2016, the Competition and Markets Authority.
Can you see the screen and hear?
Yes, madam.
Okay.
Published reports about banks. It found that older established banks didn't have a complete partner for customers. Meaning small banks find it difficult to access the market to grow. That customers weren't given enough choice or control over their money or financial information. So, open banking was born. Transform the way customers bank online. Open banking aims to re-energize banking by making it easier for customers and small to medium-sized businesses with access to accounts and accessing products. So how does it work? Open banking allows you to give consent to regulators provided who could purely access your bank transaction history or to make payments. You could give consent to a regulated house-to-house website to access your current account transaction history to find a better account or overdraft for you based on your actual spending. Or for businesses, you could give access to your business bank account transactions, which could make accounting easier or speed up the process of applying for a loan. Open banking could help you move, manage, and make more of your money. You are always in control of what transaction information you choose to allow access to, and you can stop access.
There happened just anything, like what did you understand from open banking?
So competition is getting worse with this open banking model coming up.
Okay. Competition to banks. Is it?
Yeah, to banks.
Okay. And how is that competition getting worse, Asila?
Yeah, there may be banks who are traditionally or rather very conventional type, but with these APIs and new technology, fintech innovation coming into play, maybe some banks will have disadvantages, and maybe sometimes small players in the market may grab these opportunities very easily. So
Okay.
thereby there's big competition in the market.
Yeah. So right. So that is basically the sort of the main concept, like where fintechs come and disrupt the banks. And when we apply this to the concept called open banking, really it is now we are at an operational level. Like how now when we say open banking, it is a specific thing, like it is a operationalizing of what you described, right? Now, it is one way. Now, one way that fintechs can come and increase in competition and smaller players is by just providing separate financial services, right? And then just having some type of connectivity to the bank accounts. They can even not provide some connectivity. They can, we studied how in the payment card model, how a fintech can come to the middle, through the payment app or something. They can have connections with the banks. Now, the difference between that and what is referred to as open banking. Now, remember, open banking is a term, right? It is a term that is like, we have, what can we say? Now, when we say mortgage, in university, there is it's an accepted term. Everyone knows what mortgaging is. Or if we say corporate banking or retail banking, right? Those are all terms, right? When we say corporate banking, it is banking for the companies. When we say retail banking, it is for individual customers. Now, that is identified, and we can distinguish between what is corporate banking and what is retail banking. Now, like those terms, open banking is also a term, right? And now, what this mean, what when we call open banking is where the bank moves from being a standalone one, like the conventional banks that most of you are already working, where you do all your work and you might hire some company to develop some software or something like that. Instead of that, you have APIs that will allow anyone who fulfills the requirements of connecting to the API, the technological department requirements, or if there's some fees involved, then with that they can connect and automatically expand, right? So it doesn't so, and these APIs can be used by people anywhere most of the time. Like, it doesn't have to be someone who has to physically come and set up a relationship with you, right? So if, depending on the type of APIs that the bank opens, then any person, any third party can connect. This changes. Now, this is what, now your banking model changes, right? Now, earlier, the way you access the customer is, let's say you're either directly, now this one, right? Directly the bank and the customer. So in the middle, you can have a banking app or internet banking, whatever you account, all of that can come in the middle. But still, the customer was directly connecting to the bank. Now, when I use Sampath Vishwa, I am directly connecting to Sampath Bank, right? Or BOC Smart Pay or NTB Freebie, then I am directly connecting still to that bank, right? Now, we have apps like, have you heard Direct Pay in Sri Lanka? Have you heard of the payment at Direct Pay?
Yes.
Right. So now,
And one pay.
yeah, OnePay. Now, those are not coming with banks per se, right? Now, even Freebie has a similar model. They are, even though it is NTB, it is connect. You can connect to multiple banks, right? They through and not Freebie so much. I think Direct Pay has a slightly different model where you can access the you through safe transfers, whatever. Now, that is a very basic model, right? Now, here this is a bit above. Now, directly from the app, you can access the other banks' internet banking, right? Or the financial data, right? So now there is a change here. Now, right now, we can't access another bank's, our bank's internet banking or our financial data that is held with the bank, we can't use a third party app and access that information. Right? Now in Sri Lanka, I don't know anyone who allows that. I don't think it's available. Right? But with this, that is what gets allowed. Right? So this changes the way internet banking is done. And this is now happening even in Sri Lanka. We are looking at developing an open banking framework. And this is changing. Now, this is the part that is changing, right? Now, this is what is open banking. This is without open banking. Here, what is happening is the bank is opening up their data to third parties, right? Now, that distinction is what you need to understand when we talk about open banking. And through that system, yes, competition can upset the banks. But also, this can make the bank more accessible to the customer. Right? Instead of the bank having to maintain a mobile app on its own and the bank customer then feeling very tired. Now, for instance, we all have several banks, but because it is so cumbersome to put the passwords and OTPs and all of that for each and every bank, we end up only using one or two of the banks. Right? We all have many banks, that is the truth. But because it is so cumbersome, we end up using one or two banks. And the other banks, their money is just sitting there. There is no financial services being used. The customer is not sending money. It's not doing anything. It's just lying and sometimes going into dormant also. Because it's too cumbersome. But once this happens, then the customer can now manage all their accounts at one go. Right? They can transfer money between banks much easier. They can choose when they are choosing. Now, sometimes if we want to put let's say, open an FD, then if you are opening online FD, we have to transfer the money, let's say a self-transfer to the other bank, then go into that bank's internet banking and open an FD, right? Then we have to look at the FD rates of all the banks to see which bank is the good one, right? Now, with Open API, now what they showed in the video was you can check the price. You can have price comparisons, like what is shown in this diagram, right? Then the customer can see, okay, which of my banks have the best FD rates, right? Then without having to log in, log out, go to the other one and all of that, through the third party provider itself, I can move my money and open an FD, right? Or same with the loan. I can check, okay, which one has the best loan, and then some basic credit limit or overdraft, then I can use it immediately through the third party. So I don't need to log into one bank, log out and go into another bank, right? So this is the difference of open banking. And it is very important now. When we are just saying, it will be like, oh, so what, it's just one step. But this has a big impact, right? If you are not a customer's primary bank, then you get very little services or very little income from that customer simply because it is cumbersome. But when this facility happens, then you're open to much more customer engaging much more with the bank, which is very important, right? And then also for the customers who can't, let's say for low-end customers who don't have the ability to go and check FD rates of everything or loans of everything. When such price comparison sites and all of that are there, then they can easily find the best service for them. So these are the important things of having this open banking, and that's why countries like European countries, finally we will see that countries that have already implemented open banking, that's why they have gone into open banking, because there are so many benefits that traditional banking cannot provide, but through this digitalized openness that you can provide for the banks. So remember, this is very important, and this will change the way your bank works, right? Even branches, all that will change when an open banking model gets introduced. Is that clear? Were you able to distinguish between competition and innovation by third parties, that is fintechs, and what is open banking? Yes? No? If it's not clear, please ask. Right? So remember this definition. Okay, so there is data and of financial services, right? And then it will allow accounts and data across institutions to be used by different customers, right? Now we come into what type of data is getting opened, right? Now this is very important. Now remember, you need to change your idea of what banking was, right? What the type of banking that you are doing is going to change, right? Then what is this? What data is open? Now when we are saying open banking, as I said, it's not a physically open bank, right? It is not just everything is open technologically as well, where third parties can come and see customer data. No, there is a type of data that gets open because of the confidentiality, right? So this is from the Open Data Institute in the UK, right? They were they pioneered this developing open data frameworks. Now here they have shown what is open data and what is closed data. Now, things that, like sales report, now these are internal bank things, they're completely closed, right? Then you have shared things. Now, things that you shared with the regulator, then via authentication, now certain payment, now if you have direct connectivity to things like slips, then companies, then from that, those are via authentication. They're still not open. They are only shared. Only specified people can come in, right? Then you have certain public access, right? With limited use, right? Then you have open, completely open, right? Through the open license, where you say, okay, this is the license, this is how you can use this type of data, right? And that is very important to distinguish what is open data and what is not, right? Now, as we go now, here you can see, now personal data is more closed. Then you have commercial and government data. It's moving to the openness. Now government data is more open, right? Or more available because they are public data, right? And then you have the more specific the type of data becomes, the more closed it becomes. So then only all this regulation kicks in. Who you can share this with, under what regulations, for what purpose, right? So this is what this open banking is, right? It's really identifying what type of data can be shared, right? Any questions so far? Because this is a very sort of a nuanced thing. When you say open banking, it seems it's very straightforward, but it's actually not. It's more technical. It's like that word last time we studied, disruptive innovation. When you just hear the word, you think, I know what it is. But then when you actually study it, it has a different meaning, right? So this is also the same. And these are all new things. These are things that are happening right now, right? And these are things that will get established in the very near future. So that is why it's important that you find these things out and understand what they are, because your banks will also be adopting these, right? Right. Then there are some key terms. Now, these key terms are coming from the PSD2 regulations, right? And when we are talking about open banking, there are some standard parties, right? It is not where, so as I said, this is a very specific concept. So it's not just, you can't call anything open banking. It doesn't make sense, right? So open banking has some specific concepts and specific types of users, right? Now you have the first, of course, the customer itself, the payment service user, right? Is a person who makes use of a payment service in the capacity of a payer or payee, right? And simple example is the bank customer. Then you have the PSP, right? Now we also use this word PSP in our regulations, like in the minimum compliance guideline. So then you have the PSP. The PSP is the payment service provider, is an entity that carries out regulated payment services. Now these are licensed people, right? Regulated payment service providers. Even banks fall into this. Then you have the third parties. Now this is where the real difference comes with the open banking, right? The part of the third party. So third party provider is an authorized third party that provides the links between the banks and the merchants, right? Or the customers, right? And then customers can allow TPPs to access multiple banks. However, the banks are the gatekeepers of the customer's data. Now, this is very important. You have to remember that even though you're opening, you still have the burden of protecting the customer's data. It's like KYC. If you are using someone else's KYC, right? And you say, you have an account with the other bank. Very good. I will use, because you have an account of the other bank, I will just take that information and take that, depend on that bank's KYC, right? But practically, the responsibility is still with you, right? You are still responsible for the for complying with the FIU regulations. So you can't say, oh, so this bank had given this customer so much credit, so therefore I also gave it. You know, if they can give, why can't I give? That is not the answer, and you know that, right? So the same way, now banks can't just give the customers' data to the third parties and then say, oh, now the third party has, they have deleted the data or, abused the data. No, the customers, the bank remains the gatekeeper of the customer's data, and it is given through consent, right? And when the customer accesses the data, they are not accessing, they don't type their password. Now, as in the video they will show, they don't type the password in the app, they are typing the password in the bank's interface, right? Now, before PSD2 came, there was very interesting things happening in Europe. Now, there is something called screen scraping. Do you know what screen scraping is? Screen scraping is where you can, with a software, pull the data which is on the screen, right? Now, there was a nice fintech called Sofort in Germany. And now, this was before PSD2 came into effect, and Sofort was one of the pioneering fintechs, right? Now, they wanted to help customers make their payments, balance their, to do all their financial transactions. That was the service that they were providing. Now, those days APIs weren't available. Banks were still saying no APIs, no APIs. So what Sofort did was, they, in their interface, they will ask the customers to give the customers username and password to SoFort, and SoFort will go log in as the customer and do all the transactions, and also screen scrape whatever information required and do the transactions. Now Germans were very trusting. Now, a lot of people were using SoFort. They didn't see a problem. Now this is the thing about customers, right? They give consent to things that we as bankers sometimes I wonder, okay, is this really, like, is this possible? Would people actually give consent? And sometimes people just trust that the presence of something, the open presence of something in the environment means that it is okay. So we have to be very careful. Now that is why customers, the banks are the customers gatekeepers, and with PSD2 they said you can't do screen scraping, you can't do that, you can't. Now if you remember from this video that I just showed, it says you are not giving your password to any third party, right? Because there were huge risks, because even though SoFort wasn't caught in fraudulent activity, this is like a fraudster can very easily play out all the money of the customers by asking for their login details, right? So this is one of the safeguards that PSD2 brought. They said no screen scraping, no sharing of your password and PIN. You have to use GDPR, right? You have to make sure the data is protected, and third parties only get to use data for the specified purpose, right? And then the next key term is Open API, right? So Open API can be free to use. Now they have said in the open banking, this thing, they say it's free to use, right? It's not always free to use. Now that is an important thing to remember. Publicly available programming application that provides developers with programmatic access to proprietary software applications, right? Now, this is the standard definition of Open API. But in banking, all Open API doesn't necessarily mean free API, right? It's you're free to use it, but you can't you have to pay. Once you're in it, you can use it any way you want, but you have to pay sometimes, right? Now, if you want more terms, you can go to this link. I always try to share all the links with you all so that you can now do your own work as well. Now, the next important terms, right? Now, these terms are under these terms, you get a licensing. So, now we are also working on open banking framework, and their similar terms will come, right? It might not be the exact same name, but the concept will be the same, right? Now, an account is AI now has in PSD2, there are two main types of these third parties, right? One is the account information service provider. Account information service provider provides an aggregated view of all the accounts and past transactions that a customer has with different banks. Now, this is an account information. Now, remember this distinction. And to provide this view, the customer, the ASPI should have authorization from the customer to view the corresponding transaction and balance information, right? So now this is the basic, like a simplified process, right? Where you have the account information application, then you select your bank and then you sign it. Right now, I'm just going to share this link with you, right? You can also play around a bit. Right, you can also go to this link, right? And what happens is they have given us this link so that we can see practically what this ASP is. Now they have done a small demo, right? I sent it in the message. This is a link created by WSO2. It's a Sri Lankan company. They do a lot of open banking related work. I thought it is important for us to use Sri Lankan company work as well. We know we are always using foreign companies, but our companies are also doing good work. So it's good to share these things. Can you all access this link that I sent in the message? It's also in your PowerPoint. So if you are accessing it now, basically, now this is how this is an example of an account information service provider, right? So then you log in, and then you can now see, now they have created this interface, how it would look like, right? Now you can see your balances, right? And this is they do this for the EU market, that's why it's in euros. And you can see all your transactions, right? So different banks are there, right? And then you can see the different transactions. And then if you have another bank, you can add a bank, right? And you can have your added banks, and then you can add a bank, right? And then now you go to the other bank that you have, right? And then you log in, right, as from that bank. And then it says aggregator, that is a third party, is requesting access to your bank account, right? And then you have bank, you can select which bank account that you want, and then see permission details below, read account details, allow access to add additional elements in the account payload, allow access only to read credit transactions, allow access to read basic account information, allow access to read all direct debit information, right? So then you're saying okay, and then you have Citizen Bank also has been added, right? So now this is the third party now doing these things through the API, right? And then you're going back to the start screen, right? If you can access that, were you all able to access that? Right. So let's go to the other one, right? Similarly, we have payment initiation service provider. Now payment service uh, payment service directive PSD2. It's not only for payment services. Now it's not only for payment initiation services. It is also for account information. So that is the real difference, right? Because through PSD2, it said, okay, it's not only for payments, account information also you can use, right? So that is the difference in this one, right? So that's the important point, right? Now, this one, the payment service provider provides online services to initiate payment order at the request of the customer, right? With request to a payment account held with another payment service provider, right? So to provide the facilities, the third party should be authorized by the customer to provide the payment service, the payment, right? To proceed with the payment. The PSPs are responsible for the transaction flow starting from the moment the customer inputs the payment data, right? To the moment the funds appear at the bank. Now, this is how you proceed via the payment initiation service, right? I'll just put this here as well so you can so do this, right? And so if you go here, now this is something that they have created. Now this is a payment service, right? Remember, it's a payment initiation service. So the other one, we saw different bank accounts, through the bank accounts, what payments we had made and all of that. And then we have now at the checkout point, right? So, okay, now we have all these in the basket, and then we go to, now they have called the third party, the payment initiation service provider, direct pay, right? And then you can select, please select which bank you would like to proceed with. Now we are going into Citizen Bank, and then we are logging in, and then we can choose which account to pay from, right? It says one-time payment, and then you're allowing, and then the payment has gone. Now that is something the payment service provider can provide, right? So this is the difference that these two systems can that this regulation provided. Now this was not available all this time, right? Now aggregation is happening to some level, but not where you can select different banks. Now in Sri Lanka also, I don't know whether there is aggregation. Some places they have Master Visa, Sampat Vishwa. They have some places like that, right? But there is no bank level aggregation where you can select, where you can input your banks to the different service provider, to the third party, and then you can select and get access directly to your bank account, right? And that is the difference. While they may seem very simple, they have they have a big impact on the way customers use the bank, right? So this is what changes how the customer interacts with the banks. And now, as I said before, that especially if you are not the primary bank or if you are not the primary app. Now, on my phone, I have about 4 payment apps, but I only use one because now that I am very well comfortable with that one. So it's not where my primary bank account is held, but I put money from my primary bank account into this other app, which is by another bank, and then I make the payments, right? So now when you have open APIs aggregated service, then I don't have to do that. I can directly access the bank that I want and pay from that, right? So then risks of open banking and how to address them. Then we have the situation of open banking where data is shared, right? Then when data is shared, what are we disclosing? We are disclosing our financial information, right? So we are disclosing what are the transactions, what frequency, what is our income, all those things are there, right? So then when we are giving, there is obviously a risk of loss of personal data, right? Data protection violations can happen. You can be used inadvertently for money laundering, right? For fraudulent transactions. Those are always there. Now, even with our normal banking, we have all those risks, right? Now, with this also, similar risks are there, right? So, which is why you have to have increased cybersecurity, customer awareness. So customers shouldn't just be giving permission for this, that, and everything, right? Some licensing regimes. Then how to ensure that the AML CFT procedures are covered. So all that must be ensured through by the banks when they are allowing open banking, right? So then what is the effect on the bank? This is what Akshay was talking about. Now, competition will take place, right? Competition will take place. And then when competition takes place, we have to be able to respond, right? So banks need to choose between defending their ownership of the interface, right? Now, if we go back here, now here the bank is having an interface to the customer. Now here the bank doesn't have an interface. With open banking, It's directly going, this is what the customer is interacting with, right? So then the bank has to see what is the role that they want to play in this. Do they want to be front facing, or do they want to be not in the forefront but be able to provide customers with better service, where the fintech will then create a more level playing ground, right? Then your if you switch, then your business model changes. It changes from just net interest margins to one of fees and profit sharing, right? Because you get fees from the fintech, and then you can share your profits with the fintech as well, right? Or with the fintech will share its profits with you. So the business model is changing. The business model of banking changes. Of course, yes, the interest will be there, but there are fees and other income as well. So the banks have to choose which way are we going to go, right? There is a situation where, let's say, all the other banks are okay with open banking and they have connected to third parties. Sorry. Then, if you will just get left out, what will happen to you, right? So that is very important to understand, to choose, because you might just get completely left out and you might not collect new customers, right? Then the other is the banks need to develop good business models to respond to the changes in the environment, right? And harnessing the potential of third parties. You, when there are these third parties around, there is no point trying to ignore them or get rid of them. Right? We want to figure out why are they useful, why is it useful to have them, and then develop from there, right? Um, then we come to third open banking initiatives around the world, right? Now you can see UK, they implemented open banking in 2018, and then Europe also. It took longer because there are more banks. It's different. Now you can see in every country they are doing this, right? In India, they had the UPI. Right? Let me see if I can show you the UPI. Which is a very interesting. No, they don't have any. I was trying to look for an image about how. So UPI basically does this. So it doesn't call itself an open API, but it provides a similar. Just close everything. Um, so Unified UPI, which was developed in 2016, it connected. It was like a common payment platform. So all the payment service providers could connect into one platform and provide services, right? And it's interoperable. It's really quite interesting. And if you get a chance to just look at UPI of India, do that. It's quite good. And then, as you can see, there are a lot of countries. Now, the dark blue are the countries where the regulations are already in force for open banking, right? And then these are the countries that they have shown interest. Now, actually, Sri Lanka is also should be one of those because we have started our open banking framework development, right? Now, when was this? When did we put this out? In last year, April, we actually March we released this call for like public consultation, right? So open banking frameworks generally are developed through public consultations, and there are many rounds of public consultations, and it's like a industry bodies get together and develop them, right? And then, so we also had a call for public consultation, and we had responses from the public, that is IT companies, banks, other interested groups. They sent this thing, and then then we appointed a committee that currently is developing an open banking framework. So open banking framework has both technical and legal framework, right? So one is the APIs and what you are sharing and how that happens, and then the legal framework, like okay, how is the power data shared, what are the protections, all those factors come into what is called the legal framework of open banking, right? So that is what open banking is, and because it is happening in Sri Lanka as well, it is important that you get a good grasp of what this is. So you can. Are there any questions? Are there any questions? Any questions on this? Okay. Acela, Gayatri, any questions?
No, madam.
Okay. Right. So if you have no questions, let's take a 15-minute break and come back. Very much. I don't want to overload you with information. This is very important, but I decided to keep it light without sort of stretching. There's a lot to learn, but I don't want to overload you with too much information here, because I feel that it's more important that you understand these concepts rather than me sort of teaching more and more and more and more, right? So I'm just going to keep this very short. So we are going to finish the lecture pretty quickly today. And I just want to have a discussion with you, because the reason that this lecture today is basically on how these new types of banks are coming about, right? So it's very important that you understand this. I don't want to sort of fill your head with too many different concepts, so I'm trying to keep it as simple as possible, right? So I want you to just discuss with me what before going into the next type of bank, I want you to be able to distinguish open banking and traditional banking. Can either of you do that? Will you be able to tell me the difference between traditional banking and open banking? Right, just to recap, now remember, before I go into the next concept of digital banks, I made it very simple, just very straightforward. Um, when the open banking is the more difficult concept, I think digital banking is more easier. Um, and so open banking is really giving that access when you have this when you have APIs, right? Now it's based on APIs, right? Next we are going into digital banks, right? I just added this at the end. I'm going to keep it pretty short so that we can understand this one, right? Now, when we take uh, digital banks are not banks with internet banking, right? They're not banks with internet banking. I'm just going to type this out, right? It's got a pure online presence. I'll just type this in for you. Digital banking must be distinguished from internet banking, right? Now, we have something called internet banking in Sri Lanka, right? Digital banking is not what we call internet banking. All banks now have internet enabled features, right? Then what is digital banks versus a traditional bank that has internet facilities? Now, digital bank is fully online. Now, in Sri Lanka, we don't have digital banks because the banking license has a need for a physical location, right? And in many countries, the existing banking license has a requirement for a physical location, right? You have to have a place of the bank, right? And then these regulators, supervisors, customers, that is the place you go to do the banking, right? You can have an online presence as much as you like, but you need to have a physical bank with physical records, right? So that distinction is crucial. This idea of the digital bank arose with fintech and with APIs, right? And with the mobile phone. So most of these digital banks are actually like apps. You can download them on the App Store, right? There is no physical bank around. There is no place for the customer to go to scold anyone, right? Some of them don't even have people to call, right? They are all with the chatbots. So this is completely digitalized. So when you completely digitize it, you can bring your costs down drastically, right? You bring down your costs drastically, and because the overheads, right, of running a physical place, the staff, all that comes to an end, and you are just running an app. So you just need people who are able to run the app. So that is very important. So that is how digital banks compete with the traditional banks. One of the biggest problems the traditional banks have is they have a huge cost structure, right? They have a huge cost structure, and this cost structure affects the digital banks, especially in this for the younger generation, because the younger generation is much more price sensitive, and especially in after the financial crisis in Europe, what happened was the younger generation they became poor. Actually, they couldn't afford houses. They continue to live with their parents or in shared places. They can't pay their rents properly. It's like the Uber economy, where you're not a fixed employee, but it's called the gig economy, right? So they don't have fixed incomes. So then the traditional banking system is made for people with salaries coming in, the salary coming in. So okay, I will give you a credit card, you have a salary coming in, I will give you a loan. But when your market changes and you no longer have people with those salaries, now in Sri Lanka that trend is there. There are a lot of people, you might know from your experience, who are now self-employed, right? They are not interested in having these permanent jobs with salaries coming in every month, right? It's not that they don't have an income, but they don't have that fixed permanent stable income coming in, fixed amount coming in every month. So when your when your customer is changing, right, you have a lot of fixed costs, but your customers' fund inflow is not fixed. It's changing. So then how can the bank respond, right? How can banks also become flexible so that the bank's overheads are also not fixed, right? So one way to address this problem is going online, where you minimize your overheads. It doesn't mean that you have no overheads. Of course, you have a staff. They need a place to work. They need computers. They need internet. They need their salaries. All that is there. But you can minimize those costs significantly when you digitalize, right? So one thing about these digital banks is they are very flexible. They don't have the rigid requirements and the rigid ways that customers are assessed by conventional banks. Now, in a conventional bank, to get a loan, to if you are a salaried employee, the interest rate is lower. If you are an entrepreneur, the interest rate is higher. That is actually very counted. It is, yes, it's based on risk, but we consider, on one side we are saying, oh, we must promote entrepreneurship, we must encourage people to be self-employed and then employ others. But then when we are going to give a loan, we tell, no, we are going to, sorry, you don't have a fixed job, therefore I'm going to charge you more. So the market signals are the other way around. Now these digital banks, these newer banks, these are the sort of odd places in the market that they are trying to address, not by flouting the rules, not by non-compliance to the prudential requirements, but by changing their business model so that they have more allowance to pass on to the customer, right? So when you bring your cost down, when you become more flexible, the digital bank, you have more space to give your customer some flexibility. But when you have as much costs on your side and overheads and a rigid structure on your side, then you have to be rigid in the way that you deal with the customer, right? So as you might have noticed in this whole discussion of fintech, there is a lot of business sense involved. There's a lot of business modeling involved. This goes back to our definition of the word fintech, right? That it's not only the technology that is changing or the product, but the business model, right? So your business model itself is changing, and as banks, as bankers, we need to be aware of this change, right? There is no point in us hiding behind regulation or saying no, banking, this is great, this is the only way for it to be done. No, even the central banks are looking at these different options because there are benefits to customers, especially the customers with lower incomes, right? Uh, Now, if you go back to the disruptive theory, the incumbents will have their existing main customers. They will take care of them. But a lot of fintech is targeting the lower ends of the market, right? The people who are getting sidelined by the existing system and they are not coming into the banking system because the banking system is either too expensive or too rigid for them, right? So technology is getting used to ensure that these people can also be included in banking. Just because we have a bank account doesn't mean that they are in the banking system. No. Some people have bank accounts, but they do all their transactions by cash because they find it cumbersome, or they don't have the required technology to participate in banks, or they don't have the required resources like a vehicle to get to the bank or something like that, right? So in all these ways, this digitalization process and the mobile phone makes it easier to access a market that is getting excluded, right? And that market could also be the youth, right? It could very easily be the youth. And so this is what, then they don't have a physical presence, right? and completely online. Now but however, digital banks are still licensed, right? The countries that have digital banks, they have license. You can't just start operating a digital bank because it is digital. They have to meet the prudential requirements. They don't have any special the risk profiles are similar, right? So you have to maintain all those risk profiles, and that is continued. Let's just look at this. I found this video about from Neobank just to give you an idea what this means.
Neobank is entirely online with no physical branches and offers digital-only financial services. As a direct bank, Neobank reaches customers with its mobile-first financial solutions. Considering the tech-savvy and the underbanked population, Neobank is predicted to surge to 98 million users by 2024. It has become increasingly popular due to its innovative banking and financial services, attractive fees, savings and expenses monitoring, hassle-free account creation, and personalization. Neobanks are on the verge of extending measures to combat the challenges of financial inclusions and other financial services of traditional banks. With such driving features, Neobank is gradually becoming a sustainable and lucrative business model in the fintech industry. Neobank is an emerging financial tool that has an exponential demand for worldwide adoption to provide niche solutions and detangle challenges of traditional banking.
So, as you may have seen, now they use the word neobank, right? Now these have different names. Digital banks is one, right? Neobanks is another. Then you have another word called challenger banks, right? Those are all banks. When you read literature, and as Sri Lanka also moves into digital banking, you will find that these terms are increasingly coming up, right? So if we just look at the types of challenger, now again the word challenger banks, right? Now neobanks, digital banks, challenger banks, they're all the same, right? Now if you look at the world, now look at the number of banks in each country. Now even India has these, right? So India, then look at UK, it's very, very high. Actually, UK has been a hub for fintech. So if you want to understand fintech, a good place to study fintech, the experiences and the interesting banks and interesting fintech operators, UK is a very, very good place because it's they aimed UK to be a fintech hub, right? And they did it because the UK has a very good financial regulation system. It's very flexible. It gives a lot of space for innovation and new companies to come in. So they have evolved like that. So though we have UK's financial regulation, we have the older version, right? So UK has evolved much faster. A lot of the other countries, a lot of the Commonwealth countries have the older UK regulations, but UK itself has moved forward. Of course, Sri Lanka also has moved forward, but because our market is not very developed, right? Even though we are banked, our financial market is not very developed. People are not using financial services as much as they can. So in that light, it is difficult to develop a lot of new fintechs, right? So even though you have all these other things allowing fintech, it it doesn't really generate as much innovation because the market is weak. But in UK, it's not the case. It's very centralized, and because it has access, because it used to have access to Europe, there was a big market that people could easily come and work on, right? So UK has a lot of challenger banks, right? Now you can see in this, there is a challenger bank called Monzo, right? Monzo started around, I think about 2004 14, 15, and they started giving cards. Online, you can request cards, and it was all the young people who took the Monzo card, right? And now Monzo is now almost like a proper bank. It's online, but it has a large number of customers. It has gained a lot of credibility. Now, Starling Bank is also the same. Revolut, Tandem, they are all such banks. So these banks are now quite stable. They are not sort of sideline risky banks that people think, oh, it's risky to put my money in. They have gotten mainstream acceptance. So this is the way that it's going. So if in Sri Lanka we allow digital bank licenses, we could have a similar case, right? um, so then we have licensing, right? Let's take Singapore's example. Singapore very recently brought in a licensing framework for digital banks, right? Now, basically, they had if you look at the eligibility criteria, it is slightly different, but more or less similar, right? So it says at least one entity in the applicant group has to have 3 or more years track record in operating an existing business in technology or e-commerce, right? Because if you are going to do digital, then you must have experience in working in a digital business, right? So that is one main difference, right? Then key persons are fit and proper, that is obvious. Then demonstrates the ability to meet the applicable minimum paid capital requirement, right? So that is also similar. It provides clear value proposition incorporating the innovative use of technology to serve customers' needs and reach underserved segments of the Singapore market, right? Now that is where the distinction is coming in, right? That distinction is clearly coming in because the purpose is not to go and disrupt the incumbents, right? It is to show how innovative technology is going to address these underserved points of the market, and they are very clear. You're not just coming to have a bank, you must have a bigger purpose, and one of the main purposes is this reaching the underserved segments, right? Not only Singapore, in any country, that is what they are talking about, because traditional banking, now it is well understood that traditional leave out certain segments. It doesn't have to be these poor people living far away. No, it can be people in the cities. It can be people who are doing some sort of jobs, right? It can be people like the youth, right, who doesn't have fixed income. Therefore, they don't find it useful to come into the banking sector, right? So there are different segments in the market that can get easily sidelined through traditional banking, and this is what digital banking is trying to address, right? Then demonstrates that the proposed digital bank's business model is sustainable. Now that is for other as well, but for digital bank as well, because it's not straightforward. Just because it's actually more difficult because there is no physical presence as well. So you have to be able to reach the people, gain their confidence, and change the way that they bank, right? Traditionally, no matter what, we are used to going to a bank, right? And then we need to figure out how now some banks, they don't have physical branches, but they have ways where people can withdraw money. Either they will couple up with another main incumbent bank, or they will have their own ATM machines. Something they will have so that people can withdraw money, right? So those are the practical things, right? Then if there is checks, how do you deposit checks to that bank, right? Things like that. How do you link with how do you bridge with the existing system, but also allow a new system? So that drawing that line is really, really important. And then you have to submit the feasible plan that can facilitate an orderly exit of the proposed digital bank. Now that is also like normal banks, right? Then shareholders of the proposed digital bank must commit by providing a letter of responsibility, a letter undertaking to the Singapore Central Bank that may require for the proposed digital bank. So you can see that it is similar to setting up any bank, but there are some added features such as having expertise in digital banking, right? Then if you look at licensing of digital banks in Asia, right? Now you can see it's happening, right? It's happening in the countries, right? And even in India, right? So it's already happening, and now this Rakuten, it's the same company that develops Viber, right? Viber, the WhatsApp. So you can see that it is not so the idea of banking, the idea of who can set up a bank, right, is changing. Technology companies are coming in to open banks, right? So then banks, incumbent banks should be able to identify what it is that is going to work for them, right? What and we might see in the future incumbent banks, your roles as bankers might start to change, right? Your role at branch level, it might not happen in the next 10 years even, but it will gradually change, right? And because already we are seeing, okay, banks are telling customers go to the ATM, don't come to the counter, do it online. They are already telling customers not to come, right? They are slowly digitalizing their processes, and slowly the banks might, when instead of the new entrant catching up with the incumbent, right, the incumbent might change its model to be competitive like the new entrant, right? So remember, it can go the other way around as well. So you have to remember this as a bank, that these are the changes that are taking place, and this is why I want to explain this as clearly as possible. This is the way the banking is changing through fintech, right? So payments is first, but then overall banking is also changing. So because we often tend to overlook and we think, oh, it's only payments, right? The payments getting digitalized, everything else is only internal processes are getting digitalized, external, but still the person will have to come to the bank to get the loan, still they have to put the wet signature, still no. All those things are changing, right? So remember, we must be aware of these changes that are taking place in the environment, right? Finally, I'm just going to wrap up here because I feel that this is otherwise too heavy for you, right? And the next word is challenger banks, right? Now, challenger banks are banks that uh, have challenged. Now, the word actually came up in the UK, right? Uh, they were who are these challenger banks, right? Now, challenger banks were challenging in the UK. There are some, like in Sri Lanka, we have Bank of Ceylon, People's Bank, HNB, the Sampath, the well-established and relatively older banks. Like that, in the UK, you have Barclays, Lloyds, HSBC, NatWest, RBS. There are some old established banks, right? That are like 100 years old, more than 100 years old. And so the challenger banks were challenging these, what were called high street banks. And these were small banks, right? There are a lot of banks like TSB, another bank called Metro. Now, they were challenging these established banks, and they are fairly recent, right? and they did have branches, but also they were going online because they were going for a low cost model. Again, they were targeting an underserved market, right? And when they were targeting this underserved market, uh, at the same time, things like Monzo came about. So now, even so, what initially started as banks that were challenging the big banks, the big old banks, like they could have been physical or even digital, has now converted as to being banks, any type of bank that is challenging the incumbent bank, right? So any bank that is challenging the incumbent bank is called a challenger bank, right? So these terms are not fixed. Again, you can see that they are moving. There's challenger banks, there's newer banks, digital banks, so they are all changing. So what we need to understand is that there is two things. The market segment is there, right? The underserved market segment, and the um, the digital, the nature of it, the digitalized version, right? So there is this article, right? Right. So challenger banks and banks, right? And they have reviewed all these main banks in the UK. Now, the reason to try to understand this, it's important to UK is a good starting point because now we have had time to see how these banks are moving, right? And now sometimes you may say, oh, I remember when Monzo came, everyone was, a lot of people were not sure. It was generally the like children, like the younger youth of rich families that had enough money to risk, that went and opened accounts in places like Monzo because it was not their main account, but they had enough extra money to go and put into these Monzo banks and everything and see whether they're working, right? People who were in the lower segments were not, most of them wouldn't risk their money by putting it into something that they don't know. But now they have gained credibility in the market, right? And that is always the case, right? So now this explains very simple. They have written what are challenger banks, right? So it says the term challenger bank is used to describe any bank that was looking to challenge the big four: Barclays, Lloyds, HSBC, and NatWest, right? And then Virgin Money, Metro. Those were all the banks that were initially considered challenger banks, right? And then there were now about this whether they are risky or not, right? Of course, not all digital banks have been successful, right? Some have had to fall, right? And then they had to, now this bank called Loot, they had to go into administration, right? So but subsequently, now if you take Stalin is a very successful bank, right? It started in 2016. It got its license in 2016. It was the first app only current account, right? And it was by this lady who started it up, and it has become extremely successful and has opened more than 2 million accounts, right? Now, this is what we are talking about, including 350 small business accounts, right? They have a demonstration here if you like to see. There is no volume on this one. So as you can see, it has most of the features that we already have. Plus, it has those fund management options, like I can budget. there control, you can control your overdraft limit, you can, so there are all these little features that accepts that. So this is also a very interesting part. Now if you want to uh, buy something, you can save for it within the app itself, right? Now you don't have to go and pay it at once. You can, once you have collected enough money, then the bank will alert you to go and buy it, right? So this is the payment part. So what you can see, if you notice, is that it is integrated, right? And this is what new banking is looking like. It's not where you have to go and do one thing and then go and do another. They try to be sort of lifestyle uh, products, mainly accepting sort of the realities that people have. Like I said, not everyone has a fixed monthly income, right? So that's why when you want a sofa, they are saying, okay, you save for the sofa. Not here, easy payment, credit, pay back in 24 months, no interest. That's not what they're saying. Why don't you can save if you don't want to buy it on credit. You can save and then buy it when it's available. So that's sort of alternative options, right? And another thing is payments like electricity bill. Sometimes you don't have to pay the full electricity bill. You don't have enough money, right? So the budgeting will say, okay, you pay only this much, and then next month you pay the other amount. So things like that, those little features really add value to a certain market segment. Now, going back to our disruptive theory, this is what we are talking about. This is the low end and the new market footholds that they are talking about, right? This is why they are disruptive innovations. They are targeting a periphery group and then building from there, right? And then once they are well established and the market, the main customers of incumbents also start thinking, hey, why am I taking this very rigid, expensive service from the incumbent? Why don't I also go to one of those new banks? That is when the disruption happens, right? You can check and they have all these other fees. There are no fees for overseas spending, right, or cash withdrawals. So they have all these other features that and then this one. See, these are regulated, right? They're just like any bank. They are regulated, right? So this is another bank like that is Monzo, right? What I was talking about, right? So when you first hear this word Monzo, you're like, what is this? But then it's actually quite successful as well. It in 2021 it hit 5 million customers, right? And 4.7 million are registered for its current account, right? Um, Customers rave about the bank. Monzo has achieved a customer score of 82% in the latest bank satisfaction survey, right? So, which means the customers are happy with this bank. Now, this is again, they also have similar features like uh, Starlink, right? So you can pay, you can easily pay, you can do your budgeting. This is the Monzo card, right? There is the physical card as well that the customers were mailed. So even though there was no bank, they mailed their physical card to the customer, right? So there is a physical presence involved here. This is the kind of integration with the real world. So it's not totally going digital where you say, okay, you have to spend digital, you have to buy only cashless. No, they are integrating with the real world. In the real world, you need a card. In the real world, you need cash. So they are integrating like that, right? So that is Monzo, right? So likewise, so you can just go and see this again. It's registered under the Financial Conduct Authority, and the Prudential Regulatory Authority, that is under the Bank of England, right? So there's this another bank. These are all British banks, right? So you can read this and find out where these things are going, right? And if you look at Revolut is also a remittance. It started as a remittance app, right? And then it expanded into banking. So you can see these and understand, and if you're like, you can also propose to your banks when these changes are happening, how can you go. So there are a lot of resources available, and to really, as bankers, to capture fintech. And what when a fintech comes to the bank now in Sri Lanka, for a fintech to operate, the fintech needs to come to the bank, and they need to come to the central bank with the bank, right? For the licensing or authorization, so the approval. So in which case, when a fintech comes to you, you then know, okay, this is what they're doing, this is what they can do, this what is their business model, right? What sort of innovations are they trying to do? Is this actually innovative? Is it disruptive, right? So all these questions you can ask yourself, right? Which market segment are they attracting? Okay, will it help our bank? Will it be a competition? What is going to happen? So all these questions you must be able to sort of break down and understand for yourself. This is really the purpose of this discussion today. So I am going to stop here simply because we are very short of we are not, I'm not taking the full time, because I feel that I don't want to overload you all with stuff, right? And just I can keep teaching and teaching and teaching, but if it's not current properly processing, it is there is no point in just loading you with more and more and more stuff, because the fintech area is very exhaustive. Right? It's very expansive. It's very large. So today I wanted to teach you how fintech is affecting banking. So main things that you all have to remember is, how do we distinguish um, how do we distinguish um, traditional banking that already has internet, right? You all have internet already in all your banks. So how do we distinguish that with open banking, right? That is one. It seems it's not just closed banking and open banking. That is not the difference, right? Now we discussed this at length. You have to be able to distinguish what is the difference between open banking and traditional banking. So closed banking, what we call is traditional banking. The difference is that the third parties can access via APIs the data that is held with the banks. That is either customer data, the financial, the transaction data and all of that, or as a payment service provider, right? Payment initiation service, that also as an aggregating service. So at the same point, the payment initiation service can connect to multiple banks, right? And if you go to the link that I have provided, you will see that for cards, so everyone, there is a different way to connect, right? But the primary thing is that this aggregation happens. So which is different to the access model that traditional banks have currently to their customers, right? So just having internet banking is not going to make you an open bank. It's got nothing to do with open banking. The open banking is got to do with you and not the customer, but your technical relationship with a third party. And then there's a likelihood that your customer will be directly dealing with the third party. That is open banking. Digital banking is where there is no physical presence, right? It is a different license. You don't get the same license because you don't have a physical presence. So your requirements, the licensing requirements slightly changes, right? You are licensed as a digital bank, and not now in Singapore also it is still trial. They have given to a few to see, okay, how is it going to work? Is this going to be practical, right? Just because it's a digital bank doesn't mean you can just start it, because you need to have the paid up capital, you need to make sure the prudential requirements are met, and you need to have a viable business, right? If people don't use digital banks, it's no point again. So having that viable business is also important, right? And the maturity of your market, right, is very important. Now in UK, as I said, the market is quite mature in financial services, right? The people use digital, they use cards a lot. Now they are using apps, but they like these alternate financial products. And now I used to be in London for some time, and there are a lot of people who don't have fixed salaries. So for them, these Monzo type things, Starling Bank type things, that give them a lot of flexibility, right? In managing their funds is very, very useful, right? So there are in the most unexpected places you will have an underserved segment. So that is something that digital banks can really address, right? That is that. And then you have digital banks are also called neobanks, right? They are very similar, right? Those are just terms. Then challenger banks. Challenger banks generally, now in Sri Lanka, we don't really have a challenger bank, right? Though we are all having incumbent banks, right? We haven't had any new banks recently. Bringing up a different business model that is challenging the existing business model. We don't have that. There are no, because remember, challenger banks are not digital banks necessarily, right? We don't have any sort of new business model. All banks have similar business models, right? So in Sri Lanka, we still haven't seen them, but that doesn't mean that it won't come, right? Because we are looking at, we are seriously considering the ability of giving digital banking licenses. Once the digital banking licenses are given, then we might have challenging banks that are challenging the existing incumbents, right? So that is always possible. And so challenger banks can be banks that have fewer branches and more digital presence, right? Or fewer branches and targeting very different customer groups, right? Now development banks are not challenger banks. They are development banks, right? They are for a different purpose. They have been there for a long time. These challenger banks are normal commercial banks. So these few distinctions, I want you all to understand. And so I don't want to overdo it, and I keep teaching you more and more things. So I'm going to stop here today. Do you all have any questions? Any questions? Okay. So we will stop. If you have any questions, please email me. You have my email address, or you can call me as well. And yeah, anything that you need to understand, just study these things up. Next lecture will be our last lecture, if I'm not mistaken. And what we will do is, I will talk about how these fintechs get regulated, how central banks are introducing are also incorporating fintech into their policies and regulations, and then we will do a summary of we've covered a very wide area, right? We've covered a very wide area. We'll discuss the questions and tomorrow. Next, this thing we will discuss from each lecture. From each lecture, we'll discuss what areas we should focus on and what are the sort of the crux of each section, right? Okay, right. Thank you very much. If you have any questions, just feel free to ask. Thanks a lot.